U.S. investors have swarmed to Chinese initial public offerings since last fall, and the Chinese internet sector knows it. This month alone, 5 China-based companies have launched IPOs on U.S. exchanges so far. Scott Kessler is the head of technology sector equity research at Standard & Poor's and has been following internet stocks for more than 15 years.
Chinese companies pursue primary listings in the U.S. Because, number one, there's tremendous interest. 2, there's tremendous capital. And 3, and I think really importantly, to some extent it validates what these Chinese companies are trying to do on a global stage.
The Beijing-based company Renren, dubbed the Facebook of China, saw its shares surge 30%, raising nearly $743 million on its New York Stock Exchange debut last week. China's third most popular internet company, Qihuo 360, is another success story, with share prices soaring $20 when its IPO launched.
People see kind of a stable to strong global economy, especially in China, and so they want to participate in the markets perhaps more aggressively. And then in addition to that, it seems like these kind of Chinese internet companies are more proactively coming public within U.S. markets, and the U.S. companies are not.
More than 35 new Chinese IPOs have hit Wall Street in the last 8 months, with an average return around 30%. Now compare this with the 19% of U.S.-based companies. Chinese internet stocks in particular are also benefiting from the absence of U.S.-based internet stock options. But will this last? While some investors rush out to the next hot deal, others have been more cautious. The recent split between Yahoo and Chinese internet giant Alibaba over the transfer of assets left some asking more questions. The mobile security software firm NetQuinn lost 19% on its first day. Likewise, shares of Chinese dating website Jiahuan.com International also fell on their Nasdaq debut last week. Could this be the beginning of another .com bubble bursting?
The real kind of focus for a lot of folks right now is it's Chinese and it's an internet company and they don't care about anything else. That's when you kind of see indications that something might not be right and might not be normal at this stage. I think it's unlikely that all the companies that have come public will be able to kind of command the market share and market valuations that they've been able to achieve over the last number of months.
However, with more than a 400% increase in internet users at home and on the go since the U.S. .com bubble burst in 2001, and with people making more money online, it's unlikely that there will be a drop in internet stock popularity anytime soon. This surge in Chinese internet IPOs is affecting all Chinese stock listings in the U.S. as more U.S. investors look east for investment. Natalie Carney for CCTV in New York.